Hey everyone, welcome. It is 1 p.m. We just got the closing bell for Monday, July 22nd. Let's take a look at how the day turned out. So, sort of how we predicted, right? Just came down, it tested that EMA 20. We spent a lot of time this morning around that EMA 20, and we finally got a upward move. But what did I say this morning? If it didn't go above that EMA 8, we're not going to get too excited. It's just a mostly sideways movement, but you can say that this is the beginnings of a bounce, but not really. We need to get above that EMA 8 in order for us to really feel like we are moving upwards. Now, this move does make it more likely that we are moving upwards, but we just want to see confirmation. We want to see tomorrow opening above that EMA 8 and continuing to move higher, preferably without retesting that EMA 8. But we'll see. We'll see how it happens. So far, this is a step in the bullish direction, but it's not confirmed yet, and we don't want to get too excited about it just yet. What it might mean, though, is, hey, maybe make your portfolio flat. Before, we were slightly bearishly positioned, and now because of this, we may want to go neutral or just wait another day and see how this goes. Remember, tomorrow and Wednesday, for the most part, we're really just expecting most likely to chop sideways because we don't have any real catalysts until Wednesday and especially Thursday, Friday. So tomorrow, I'm not really going to expect this to surge much higher, but of course, anything could happen and we could be wrong. It's just I would just put the chances of moving directly higher from here at about 40 to 45%. So a little bit better or a little bit worse than 50-50. More likely we're going to chop sideways and then a small percentage that we're going to move downwards. So we'll just have to wait and see. Let's see how it developed during the day. You can see that we came down, we tested that EMA 20 several times before breaking back out, and towards the middle of the day, we started to flatten out and just go sideways into close. So what did we say? Well, we were looking at that 555.23-ish level. So we're still a little bit below that EMA 8, and we're close, but we're just not quite there. The QQQ, very similar story. And then the Dow Jones up from the previous day close, but similar story, just not as high as the other two. You can see that where we closed is below these highs, whereas these highs are below where we closed over here for the S&P 500. So definitely strength in probably the tech. The tech is what is driving us upwards, but we can confirm that in just a moment. Let's take a quick look at TLT. TLT came down, so it looked like we were gapping up and erasing the downward movement that we had originally, but then we traded way back down. So treasuries are telling us a different story than what the equity markets are. So that, again, clues me into that probably all of that activity was really happening in the technology sector and probably more specifically in the semiconductors. We'll confirm that in just a moment. But this is what the picture is telling me so far based on what we knew led the market up for the entire year and what led it down on this most recent mean reversion that may turn into a pullback. Let's take a look at VIX. We'll look at VVIX first. So VVIX down, so slowing down, that is still elevated. Yes, still elevated. So I wouldn't count out VIX just yet. It's just that we probably got a pretty big pullback on that VIX. There's still potential to move back up. So yeah, that's pretty sharp correction right there. And we'll see. We'll see if it moves back up. For those of us who have a VIX hedge, then it could be time. We want to neutralize our portfolio, so it could be time to take that VIX hedge off. Let me take a look at option strat. I think we have that saved. At least a VIX hedge. Yes. So you can see down a bit today, giving up about half our gains so far, but still up 35%. That's pretty good. So we may just want to set a target for maybe 15 or 16 tomorrow and see if we exit right there. And then that would neutralize, at least that would neutralize my portfolio. I don't know about if it would neutralize your portfolio, but taking off that VIX in order to neutralize your portfolio and take advantage of any upside movement that we might get, that could be a good idea. We want to think ahead though. So that would be a very short-term move. That would be a move for tomorrow, not even for Wednesday. And we start getting catalysts on a little bit on Wednesday and very much more so on Thursday. So if we take it off now, we may reconsider and just put it right back on in a couple days from now. And so we just consider the transaction costs of doing that. So it may or may not be a good idea depending on how your portfolio is currently sitting. Or just have to evaluate your own personal portfolio in order to decide that. Let's take a look at our momentum. 90-day highs, 166, 90-day lows, 12. So we're starting to swing a little bit back up. Remember on Friday, we were fairly even, if I remember correctly. We're about 50, I was going to say 60, so about 50 and 35 on the lows. So what happened is it came from an extreme level on the highs, 640 something, I believe, 646, came down to about 300, came all the way down to 68, and we said it could bounce from here because we're fairly even at this point, and it could bounce back up. Or if momentum carried through, then we'd start seeing this number stay in the double digits and this number start growing to 100, 300, 400 before it got extreme. So that hasn't happened so far. And of course, this being at 166 doesn't mean that we can't go back down. So this is not a trend moving upwards yet. We'll have to see tomorrow. Tomorrow we'll have either confirmation that it'll go upwards, at least from a momentum's perspective, or this will come right back down and these two are even out. And just based on the fact that there's not really a lot of catalyst, then we might expect that we would balance out. But then again, we did go higher on the S&P. So we're really going to want to look at those sectors and see what caught attention, because on a Tuesday, we could have continuation. Monday, rotation, special offer options expiration. We reposition ourselves on Monday, and then we see what direction that we're pointed after that. So let's take a look at our sectors and see what we can make of it. Okay, so I want to look over the short term. So I'm going to look over the past week, then I'm going to look today specifically. So over the past week, home builders got a lot of attention. XLU, XRE got some attention. All of these are interest rate related. Staples, more of a flight to safety, defense, and those are the only ones of note. So these are really interest rate plays. Let's take a look. We didn't do that this morning. Let's take a look at the Fed Watch and see how that looks. All right, only 2.6% on July 31st. That's getting down there. And then September 18th, don't tell me it's 100% again. No, we're starting to get a little bit more reasonable where we've got 93, 94%. It really needs to come down quite a bit. The thing about the Fed is they made a very, 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 very bad mistake a couple of years ago. They insisted over and over and over again that inflation was transitory. Inflation was transitory. Inflation was transitory. And they kept on doing nothing. And then finally, after so many instances of inflation actually sticking around, they're like, oh my gosh, it's not transitory. We need to play catch up. And then we are where we are today. We still have inflation. So they don't want to make the same mistake. They won't want to say, hey, we beat inflation. Oh, yay. And then inflation keeps on sticking around. That would just be egg in the face too many times. It already happened under Powell's watch. He's going to make sure it doesn't happen again during his watch, because that would just be a huge blemish on his career and look very, very, very bad for him. So he's going to err on the side of caution this time because that's not what he did last time. And it blew up in his face. So the likelihood of this getting a rate cut in September 18th is just astronomically low. I've been saying 25 to 30%, which I guess isn't astronomically low, but but it's low. It's like 20, maybe 20, 25%. And we'll have more data later this week in terms of the GDP, in terms of the PCE, in terms of jobless claims. If those jobless claims, they've been creeping up. So if those jobless claims keep going up, where am I looking? Over here. If these jobless claims keep coming up, that is actually not a very good sign. That is a signal, an early signal that we could be hitting a recessionary period. Not anytime immediate, but during the next year or so, we could hit a recessionary period. Then, of course, the president who's sitting will get blamed when it's not really his fault. It's stuff that's happening right now that created it. Actually, over the last 2 years, that was creating this situation. So we just want to be very careful because we don't know how these numbers are going to come out. And if they come out poorly, then this is going to have a sharp movement downwards. Where am I looking? Here we go. This is going to have a sharp movement downwards, and then the TLT will have a nice little jump downwards over here. And then our target area was kind of this 91 or down to this 80 or 90 to 91 area. And then we could finally, if we weren't able to exit our shorts from before, we could exit our shorts then, have about a 20 or 30% return finally, because we tried to catch it right here. And some of us were successfully able to exit and others were not. And so we had to hold all the way through here. And then finally, we'll see. July 31st, we'll see if this leaps down because of the July 31st decision on the rate cut. But right now we're looking more at September because we are so close to July 31st, and that July 31st number is already down to 2.7%. So we're really more looking at September now for that to help us gap back down. Okay, let's finish out with our sectors. Let's look at today, really is what we're more interested in. So yeah, money went right back into tech and semiconductors. So that's exactly what we were talking about this morning. If money comes back, it's going to come back in the semiconductors at the cost of the blue chip stocks. Let's see how far down this goes. So, okay, only energy was down, bonds. So where are the rest? So materials, random, staples, random, healthcare, kind of random, communications, financial, all the rest more non-random. So this has some potential for the bounce and turnaround. If XL it wasn't more so concentrated in SMH and XLK, I'd be a lot more confident in saying that. But because we did get some breadth in the movement upwards today, then that gives us a little bit more confidence. Let's take a look at the charts and see how they look. SMH looking like it could bounce, but again, we want that confirmation, and we really won't be comfortable until it gets above that EMA 20. So I wouldn't be going long semiconductors just yet. I would really wait for that confirmation. That same goes with XLK, and the same goes with QQQ. We are still below some key levels here, so those are going to provide some pretty strong resistance. So not too excited about that just yet. QQQ. Or we need to get above this 485 level, which is pretty much exactly where both our EMA 20 and EMA 8 are. And then to be really comfortable, we'd want to get above this area, this 488 to 490 area, before we were very comfortable about continued movement upwards. Otherwise, it could just be chopping sideways. Let's go back to our sectors. IWM pulling back to that EMA 8 and bouncing, and that's looking okay. That's looking pretty good. But I would want to see confirmation over here in the QQQ first before I get our small caps, so they could trade a little independently. What I really want to see for small caps is if the ARK fund starts to do really well. And so far, not yet. We would want to break out of this high right here before I got too interested in small cap stocks. Home builders chopping sideways, biotech sideways, XLY sideways, ITA sideways, XLU sideways, XLI sideways, XLRE, a little bit of bounce right there, but we'd want confirmation, XRT sideways, XLF sideways. So basically sideways, even though it does look kind of like a bounce, it's the same thing, right? But we want to just get the right perspective. If it didn't make it above the EMA 8 and the SPY, so for now, we're just defining that as chopping sideways, and pretty much every other sector is doing the exact same thing. So really neutralize if you want to. I'm going to expect tomorrow to most likely chop sideways, but if not, and it gives us more information, then we can decide what to do with our portfolio. I'd be okay with just keeping that VIX on and just keeping the portfolio leaning slightly bearish, or neutralizing it and taking that VIX trade off. Either way is appropriate in this context. Okay, so since everything's chopping sideways, we really don't want to look for opportunities. We just want to just sit where we are and let the market give us some direction, especially since we have some pretty strong catalysts coming up on Thursday, Friday. Now, we don't want to be paralyzed. We don't always be like, oh, we're going to get more information later. We're going to get more information later. If we keep on doing that, then we'll never make any trades, and everything that we're doing is pointless. But there are certain times when it's appropriate for us to just sit in cash and wait. And for tomorrow, that is appropriate. Once we get a better idea of how institutions might be positioning themselves going into those reports, then we might decide that it's worth the risk to go in, or we just wait for those reports to come out. Then for sure, we'll see how institutions are positioning themselves, and then we can go and follow suit. So that's it for today. Well, we got a clear idea of what to do tomorrow, which is probably not much. Tomorrow morning, that picture might change. So we'll see tomorrow morning. But until then, have a wonderful rest of your day, and I'll see you later.